Good afternoon and welcome to today's event. My name is Philip Coombs and today I have the pleasure of welcoming back Xplora to the HC Andersen Capital platform. Today we are joined by Xplora CEO Sten Kirkbak and CFO Michael Clement, who will be presenting Xplora's Q3 results. Before I pass over to Sten and Michael, I'd like to quickly remind the viewers that you can ask questions throughout the presentation down in the chat function below. And that's everything from me. So I'd like to pass over to Sten and Michael now.
Thank you so much, Philip. As introduced, my name is Sten Kirkbak, founder and CEO. With me, Michael Clement, CFO of Xplora. We'll guide you through the Q3 result presentation today. We have 3 sections. I will take you through a summary of the quarter first, then Michael will guide you through some more financial details. We'll end with the outlook statement as well as Q&A, of course, at the end. So with that, let's get into it. I would like to take you through a Q3 highlight first. It's worth to mention initially that during Q3 and so far into Q4 as well, we have finalized some of our major investment actually ever in the company history, finalizing multiple new products. We have set up multiple new mobile service provider setup, as well as completed our generation 2 of our platform and service proposition, while also transitioning out of various legacy product, preparing for new models to come. Group revenue ended up 28% to 138.5 million NOK. We also had a strong recurring service growth, 41%, ending at 42.9 million. And we ended the quarter with 147,400 paying subscribers, also up 33%. Our gross earnings were 41% at 56.7 million, slightly lower than expected, primarily given that we are buying product in dollars, selling in euro and NOK, which had an impact on the third quarter. Our EBITDA ended at negative 18.8 million, also slightly below where we expected. Primarily there also driven by the effect from the gross earnings into this quarter, as well as a slightly lower overall sale this year as we changed our guidance from 50% to 20 to 30%. Some of the cost savings, I will come back to that later, that will of course impact positive on the future EBITDA. Our cash balance ended positive or at 70 million NOK at a strong position from our cash. Going to the next page, particularly for new audience, I would like to give you a quick overview on the goals we established when we went into 2022. We should deliver multiple new products. Eventually, we have launched or about to launch 3 new products this year, 2 of them being OEM products, allowing us to have a more in-depth integration with our software platform, as well as also extending the lifetime of each of the products. I will come back to that. We also had the ambition of replicating our Nordic SIM model, a very profitable service revenue business model, to 1 to 3 market as well, and also take all the insight and learnings from our more than 100,000 users on our GoPlay platform and convert that into a premium subscription to be launched also this year. Also, 2022, very important for us in order to establish our US operation, including the first retail and distribution partnership, and also, of course, to demonstrate the scalability and the profitability in our business model. I would now like to take you through some more of the details in our SIM service and product proposition. As you can see on the screen, we started this year with our Nordic SIM model in all the 4 Nordic countries. The objective was to launch 1 to 3 global SIM solutions or SIM setups as well. So far this year, we have launched 3 already in UK, Germany, and France. We are completed with the Spanish setup, expected to also go live throughout this year. And we have also announced the agreement with AT&T for the US market. So more or less completed 5 of our new global SIM subscription setup. That allows us to bundle our product with our own SIM connectivity. As you can see on the screen, some of the selections of the value proposition we are introducing in the European market currently, with SIM plans starting from €749 up to €1099 per month. And as we also have announced, we are expecting the same profitability in our global SIM connectivity solution as we have had so far in the Nordic market, trending from 70 to 80% margin on our SIM platform. Going into the next page, you see a highlight of our GoPlay Generation 2 platform. We have taken a lot of the learnings from our existing GoPlay proposition. We already know it works. We see kids using our platform are actually walking 2,500 steps more every single day than our users not engaging with our platform. Now we have converted this into 10 awesome new categories, from watch faces, ringtone, a lot of new campaigns, Go Learn section with educational content and so on. The objective here is to present some of these new features for free or included in our base app and connectivity plan, and then we make it very easy for the customer to upgrade to our premium content as part of the SIM proposition. That way they can get the most out of the Xplora watch experience, and the kid can get access to even more content and engage and optimize the watches. On the next page, we would like to summarize our hardware strategy going forward as well. As we previously announced, we have sold more than 1 million watches to date. We have had and successfully launched 7 generations into the market. This year, we're actually introducing 3 new products, or we have developed 3 products, our Go, Play, and Pro hardware platform. 2 of them being an ODM platform, the Play and the Pro, meaning that we have built every single component and design element of the watches ourselves. It's our IP. And also, like I said, it's much deeper integration with our software platform, again, allowing us to even better be in a position to upgrade to more premium content and increase the service revenue. Since it's an ODM model and more integrated with our software platform, it also allows us to extend the lifetime value or the lifetime of our hardware platform. Instead of having 18-month life cycle with our new product, we expect that lifetime to be even extended, meaning that we can reduce some of our R&D spend and focus going forward, and instead upgrade the product annually with even more software upgrades going forward. With that, I would like to introduce Michael to take us through some of the financial highlights.
Thank you, Stan. Let's start out with the revenues. Revenues in the third quarter of 2022 were up 28% to 138 million NOK. Year to date, Xplora has a growth in revenues of 27% from the same period last year. One of the key drivers on the next slide is the recurring service revenues, primarily driven from our connectivity operations in the 4 Nordic markets. In the third quarter of this year, recurring service revenues reached 42.9 million, a growth of 41% year over year from third quarter last year, representing 31% of our group revenues. Annualized, our subscriber base of close to 147,400 subscribers at the end of Q3, represent an annualized run rate in ARR of 170 million NOK. The underlying drivers, as mentioned, our subscriber base on the next slide is 147,400. Norway remains our largest market of subscribers, followed by Sweden, Finland, and Denmark. Overall, in the Nordic region, we have close to 7% penetration in the target group, kids aged 4 to 10, with Norway having the highest penetration, where we also have the longest history. Xplora has 3,000 subscribers outside the Nordics at the end of Q3, which the lion's share comes from the US market. Moving on to our gross margins and gross profitability in the third quarter. Following a long period of positive trend in our gross profitability, our gross margins ended down in Q3 at 41% versus 49% in the same quarter last year. We were hit by a significantly stronger dollar, and we purchase our devices from Asia in dollars. Adjusted for that, our underlying gross margin in Q3 would have been in the high 40s. The gross margins on our service business remains stable. Into some of the highlights on the P&L, growth 28% driven by recurring service sales up 41% with 23% growth in our smartwatch sales this quarter. Gross earnings, we've been through. Payroll expenses relatively stable. Other operating costs are up quite significantly. This includes marketing spend of 28.5, up from 12.8 million in the same quarter last year, largely driven by major campaigns in some of our key markets and the transitioning of products from old to new generation of products. EBITDA, as a result of lower than initially expected revenues, a hit on the gross margins, ended at minus 18.8 EBITDA. We have amortization stemming from the acquisition of Xplora Mobile Holding in 2021, according to GAAP accounting principles, at negative 12.8 million this quarter, leading to profit before taxes of minus 32.6 million NOK. Our balance sheet this quarter, as Sten mentioned, we exit the quarter with 69.7 million in cash, down from 81.2 million in cash at the end of Q2. Our business model is such that the higher activity levels in the second half of the year requires higher purchases of goods, which we are a working capital intensive company in that regards. So we pull on our cash reserves in the second half of the year. That is represented this quarter as well. Our inventories are up by 9.5 million to 109.5 million to prepare for seasonally higher sales. Other receivables are also up on higher prepayments of ordered goods from our Asian vendors, as well as VAT. We also have an increase in accounts payable on remaining payments for factory orders for delivery in the fourth quarter. We exit the quarter with 370 million NOK in equity for an equity ratio of 66%. The cash movement so far this year, we entered the year with 140 million NOK in cash. We exit Q3 with 70 million NOK in cash. The key movements include a negative EBITDA of 21 million, an earnout payment for the acquisition of Xplora Mobile Holding in the first quarter this year of 20 million. That is now fully paid. CapEx year to date of 29 million, that has been guided to 30 to 35 million for the year. Working capital, a negative 15 million movement, and a positive 15 million movement from financing, leaving us with 70 million in cash at the end of Q3. With the current sales projections, that cash balance is expected to increase somewhat in Q4 on working capital release. Sten.
Okay, thank you, Michael. So let's take a couple of slides and look at the road ahead. I think one core or one important message to the audience is that going forward, we will really focus on our core business and value proposition. Now, when we have aligned and set up 9 mobile service provider solution in 9 core market, as we mentioned, all the Nordic market, UK, Spain, France, and soon US. As we have communicated before as well, selling our product combined and bundled with a SIM connectivity plan allows us to have 7 to 10 times higher profitability on that single sale. For that reason, going forward, we'll focus on our core 9 markets because of the higher profit per sale. That also allows us to have a much more efficient spend of marketing instead of in the currently we are spending marketing and investment in up to 20 different markets where we can sell our product. Now we will focus that into the 9 core market where we have SIM connectivity. So more efficient way of spending our marketing, and also with a higher profitability per sale. And also we'll focus a lot on introducing our premium services so we can even increase the monthly recurring service revenue from each of the subscribers from bundling SIM and premium services as well. That gives us a more unique value proposition, which is also much more difficult to replicate and copy from a competitive point of view. And again, 7 to 10 times more profitability. On top of increasing our revenue and profitability per sale when we are bundling with SIM services, we will also introduce an efficiency plan for 2023 in order to reduce our operating cost. As mentioned, we have in this quarter and so far into Q4, we have finalized some of our major investment when it comes to new product services and connectivity. Again, we can then reduce R&D investments into new projects going into 2023. As well, when we're focusing more on our core market from a marketing perspective, we can also reduce furthermore our marketing investments. And like mentioned as well, we'll extend the lifetime of our product, so we will have less than R&D investment going into 2023. And we will also reduce some of our current personnel in order to meet our new guidance, 20 to 30% growth versus 50%. All in all, we have an aim to reduce our operating cost by 10 to 20% into 2023. It's very important also to mention that we'll still maintain focus on software and content delivery, and these reduction will not reduce the capability for the company to deliver software and content services. At the contrary. And also we will be focusing a lot on renegotiation supplier agreements in order to have a much more balanced currency risk. And also we have already done so in one our key agreement, and we'll focus that going into 2023. So with the outlook statement, we remain on track in order to deliver our revised 20 to 30% revenue growth target for 2022. And also very important to mention, we'll exit 2022 with a brand new hardware platform consisting of a very strong entry-level product and 2 premium products, the first ever OEM product portfolio we have had. So a stronger product lineup than we have ever had before. And with a core focus on 9 markets where we can drive an increased service revenue, both from SIM connectivity and premium services as well. And we'll also enter into 2023 with an optimized cost structure and renegotiate several deals when it comes to our vendors and balancing the currency risk. So a very healthy position going into 2023, both in terms of our cash balance, our product portfolio, the number of markets where we can drive SIM connectivity and premium services, and with this optimized cost structure for 2023. So with that, we can move into the Q&A section.
Thank you for giving a great presentation, and we can see there have come some questions throughout, so we should be able to get through a nice Q&A. But I'll start with the first question, which links a little to the customer lifetime value, which you touched on at the end. But the question is in 2 parts. It says, have you started to hedge to avoid headwinds from currencies? And asks if you could elaborate a little more on how customer lifetime value has been affected during the current market conditions.
Can I address that first? We have announced today that we are working with our vendors to try to mitigate some of the currency risks, and we have reached agreements with some. So from a hedging perspective, that mitigates some of that risk, and naturally that cost element is very important for us. In terms of the customer lifetime, our subscribers today, we have a customer lifetime of around 3 years. We target a very narrow age group, 4 to 10. So that corresponds quite naturally with that. So far, we've not seen any significant effect given the current market conditions, but it's also quite short time period. So I think it's too early to give any specific indications on that.
And I suppose the premium services, the launch of the previous services, could add to the customer lifetime value with time.
That is clearly a target.
That's Absolutely. Great. We'll move on to the next question. So Carsten Jensen has asked, what is the biggest limiting factor for growth at the moment?
In general, I think it's fair to say a lot of our sales comes from telco and retail channels. And I think it's very fair to say that the current market climate makes it more difficult for every single channels to take a lot of risk on both new product categories and new products in general, because you see a reduced consumer spend. So currently, I think it's just uncertainty in general from the consumer behavior, and everyone would like to go through Black Week and see how that turns out. Is it like before, or is it dramatic changes going into Christmas in order to compare this Christmas from last year? So I think the biggest limiting factor in general is the uncertainty, particularly since a lot of our volumes come from retail distribution and telco channels. And it's in general just a lot of uncertainties. That's also why we are quite optimistic related to we see a general trend of reduced sales in our category, the wearable category in general, although we are actually seeing almost a 30% growth. So compared to the category itself, we actually perform very strongly, but the overall demand for tech products in general is going down. So that's currently a limiting factor.
That's great. Thanks for the response. And that's something that's been seen throughout the market. So supply chain issues, is that still a factor, a limiting factor as well?
Supply chains continue to be difficult. We haven't really seen any significant changes in that in recent months.
Perfect. Move on to the next question. This question asks, penetration rate in Norway is slowing slightly. Is that a result of market conditions, or do you feel you're reaching max penetration?
No, we do not feel that we're reaching max penetration. I think we are at 19% penetration in Norway, given the age group 4 to 10. I mean, if you narrow that down a little bit, maybe the penetration is 25% in a more narrow age group. In most other market segments, the penetration for mobile communications is 100%. So we clearly aim to increase that penetration further. We've had a nice growth so far this year. As we addressed today, we are seeing that more uncertain households has lowered the growth somewhat in recent months. But we do certainly believe that we can drive penetration further.
Great, thanks for that. We have a question here about the recent announcement in Germany with going live with the mobile SIM, as in mobile SIM providers. It says, are inventories and sales channels ready to meet the Christmas rush in Germany?
We hope so. It's always something we need to balance. I think in order to answer that properly, I think one key objective with our sales efforts so far in Q3 has also been to clear stock from previous models in order to make sure that there is not an overstock of old models before we start to introduce new model. And always when we are building our guidance or the indication to the market, we are getting that from the indication from our retailers and partners. So it's also always a combination and a joint effort with what do the retailers think will be the demand, and that is how we are supplying the stocks into the channel. So we try to sell out the current inventory of old product and use all the insight from the retailers and distributors in order to meet the demand for the Christmas season. And currently we have been able to get enough product produced and manufactured, even with the supply issue. So we think we're in a good place.
That makes very good sense. Thanks for that. We have a question here which asks what market you see as the largest driver of growth in 2023.
We see a very strong development in the German market so far this year, and we also expect Germany to be one of the strong growth markets going into 2023.
That's great, thanks. And we have a question asking about the margins and asks whether you see margins recovering back to Q2 levels.
Yeah, as we state here, our margins are a combination of device sales and service revenues. We have a target on device sales of a gross margin of 30%. And we have a target for service sales connectivity of, in the high 70s, 70 to 80%. And we've also stated that our new mobile service provider business outside the Nordics is expected to generate similar margins as our Nordic connectivity business. A blended mix of that does lead us to expect margins to recover to the levels seen in the first and second quarter this year, moving ahead into next year, as we will continue to focus on the SIM business and bundled sales.
That's a great response, thank you. We are out of questions, I see, but I think we've tackled many different questions in many different areas of the business, so it's a good place to round off here. So I'd like to thank both Sten and Michael for joining us today and giving the presentation, and we'll see you next time.
Thank you.